The markets are super volatile, and the more volatile they are, the better we can make a return. Because it's super stressful to be praying for the markets to make that big bull run where everybody can become financially free. That's why it's better to compound your returns, and that's why we have created MN Fund, which is a liquid fund that utilizes 3 strategies to trade in these markets in all market circumstances. And in this video, we're going to talk about our fund and the strategies, but also something that you can learn from our strategy in the fund. Let's get started. Before we continue with this episode, I would like to ask you for a small favor, which is to subscribe to this YouTube channel, because more than 60% of you aren't subscribed but are watching. Thank you for that. But subscribing is free. And also, and I've been saying this more often, I'm doing all my altcoin portfolio updates in real time on Instagram. And as I'm currently traveling to many conferences, as there is a lot of things to do, we can't be making YouTube updates in the moment in time. So that's why you need to go to Instagram, as there I'll be providing video updates, I'll be providing posts, stories, and background info on all the trades that we are doing in the altcoin portfolio. When we talk about the markets, I've got a question for you. How active are you in the markets? Are you a scalp trader, day trader, investor, swing trader? I just want to know how active you are, because then I get to understand my community. So let it know in the comments beneath how active you are and what type of trader you actually are with the crypto markets. Because as we are discussing that quite often, I'm personally holding the altcoin portfolio, actively trading that one. I'm also doing some day trading with a smaller portfolio. Actually, that's more of a fun portfolio. And then we have multiple ventures in which we are having a venture capital, which is called MN Capital. And then we have the podcast, which is New Era Finance, which is in this studio, and the marketing company surrounding our socials. And then our recent entity is MN Fund, which is a liquid fund that is registered with the Dutch regulator AFM, and where you as a participant are able to join. Now, what are we doing and why are we having a fund? Well, if we look at the markets, we can see that the markets are extremely volatile. Things go up, things go down, things go sideways. It's always a different shape of the markets. It's always a bit tricky. And that could be an interesting way of looking at the markets to maximize through that volatility, instead of praying for that big rally to occur, what everybody is trying to do, and then try to actually time the peak of those assets and selling those. And as a trader in which we are currently trading, and I'm a trader myself, the goal is to generate a return in the markets. And I personally got completely fed up by the fact that we are praying for the 4-year cycle to happen, to have that big return in our portfolio. So I kept on improving my trading techniques. We have been working on it with the team. And if we look at the trading, the altcoin portfolio, we do have a strategy where we want to capture that upside. That's my personal portfolio. We also take way more risk by having that altcoin portfolio instead of the way that we trade at the venture or within the fund. And that's a personal portfolio, which we are not doing in the fund. We're trading it completely different. So what do we do? Well, let's look at some examples. And I've just got one in which this is the recent listing of Aster. You can see that you can basically be buying the asset at the listing or at any point in time, and then think that it's going to be worth more in the near future. You can be trading it on arbitrage between exchanges. So between a DEX and a SEX, or between centralized exchanges, or between DEXs, because there's always a gap between prices. You could also be trading it between forex pairs. So probably Aster against euro or Aster against the US dollar are not always equal, based on the fact that the US dollar against the euro is moving, or based on the fact that Aster is moving in one of the two pairs because of some flow that is happening. So there are a lot of strategies that we can do. And one of our core strategies is that we trade the volatility, but ultimately we have a hybrid strategy. And a hybrid strategy basically means that we are flexible with the way that we can approach the markets. In our fund and in that strategy, we have three different components. One is we have base assets, which is buying and holding assets that are blue chips and that we believe is going to provide us a certain return in the near future. Secondly, is the high frequency trading, which is basically utilizing a return and utilizing the volatility to generate a return on a consistent basis in the markets. And the final one is OTC trading, which is that we take trades from a project or from a protocol or another VC with a discount to help the project, but also where we think that the project has a higher value in the future, then we are happy to buy it on a discount because we fundamentally believe in that asset. So we generate an additional return and could be hedging the position or could just be keeping the position open. So before we dive into the other trades, let's look at the principles so you get a basic understanding of why we think this strategy is actually the way to go. For instance, if we look at the markets, we can see that right now ETH is outperforming Bitcoin. It just made a 144% move upwards. That means that right now, in our opinion, we are looking to get a higher return than Bitcoin by allocating into blue chips that we think will do better than Bitcoin. And that is, of course, going to change over time. For instance, at some point, the markets are going to be overheated. Then it doesn't make sense to keep Bitcoin and ETH in your portfolio. And with the base assets, we have the flexibility to just move the assets around, which means that even if the markets are a little bit overheated, we have the ability to get tokenized stocks or get tokenized gold into those base assets, ultimately to generate a return in any market circumstance, because we believe that if you're an asset manager, if you're a fund manager, that's your goal. And your goal is not to stay in the positions forever, because everybody can do that. So that's the more passive way of looking at the markets. We also have two active strategies, and therefore I need to go to the screen to look at those and to show you what we're actually doing. We recently hosted our very first crypto masterclass with OKX, and it was a huge success. We had over 100 people joining us in Amsterdam for me to talk 1 hour about crypto and trading, an AMA, and we had drinks and a chat at the end of the night. We had people driving in from Germany and we had people flying in from the UK. And to be honest, this was something that I really wanted to do for years. And I think that we're going to be doing more of those events in the future. And if you want to be part of those events and want to know it the first, make sure to sign up through OKX in the link in the description beneath. And then you'll be the first to receive updates on all of the upcoming events. As I've previously stated, we've got three strategies with the fund. And the first one is the base asset. The second one is an active trading strategy that we utilize in the markets to actually get a return out of the volatility. And I've previously shown you Aster, and I've got it again. Aster is one of those examples where if you look at this chart, then these up and down moves are technically between 10 to 30% down and then again 50% up. If something goes down 30%, it's close to 50% back up to get to the same level. So if this happens quite a lot and you're using that volatility to trade, then you can generate a return out of that. And that's a very consistent way of looking at the markets. The only tricky way that you have is that you need to understand where it's at in the entire cycle. So how does that look? Well, if we look at the charts in itself, then we can see that those charts, we use an API connection for it, is how we trade. And every green dot and every red arrow is basically a trade And this is the daily chart, which then shows you that we are actively trading the markets. I think we've done around 2.6k trades on ETH in one single month, which is nearly 100 trades per day. But in this way, we can start trading the volatility and we can start utilizing that and generating a return. At this point in time, we can achieve a return between 5 to 10% on a pair like ETH while trading the volatility. But if you look at it, you might think, oh, that's super easy to do. Well, it's actually not, because if you're looking at the markets for ETH, then you can see that we have different market circumstances. First of all, this period was a period of range-bound construction. Then we had a pretty okay move upwards, then a very volatile move upwards, then a standard correction. And here we have seen some crashes taking place that are very harsh and aren't really organic in a way that you have some bounces in between. So trading the volatility means that you need to adjust it on a constant basis. And by adjusting it on a constant basis, then you're actually able to generate that return that you're looking for. And that's why I would advise you to listen to the podcast of When Shift Happens with the CEO of Wintermute, that during periods like the bear market here, the volumes are significantly low. The volatility is then also quite low. And that is damping the return that we have on the volatility trading. The more volume and the more volatility there is, the more significant the returns will be. So if it is going to be a big bull run, I'll be happy trading the volatility. But if there's going to be a strong bear market, I'll also be happy because I can generate more volume. And the CEO of Wintermute actually said that the difference between a bear and a bull market is a tenfold in terms of volume and in terms of return. And that's quite clear, because if we look at smaller assets, and personally I'm trading Wormhole for instance, you can see that those rallies here, the price went from 7.5 cents to 12.8 cents, but in between we've had a run to 10.5 and back to 7.5, and another one to 10.6 and back to 8.5. And now we've seen a run to 12.8 cents, back to 10.8, then 12.8, and then back to 9.5. That's a lot of volatility that you can trade. And that's a lot of potential return that you can make. And that's what we try to utilize in this second way of trading in the markets. And then the final one has more to do with OTCs. So there's a market that you can see on the charts. Everybody can trade this, but there is also a strategy where the project itself is doing a new funding round, and that's when we come in as an OTC investor. So let's say Wormhole in this case, I don't know if they have an OTC, but just use the example. They are looking to get more marketing going, or they are looking to get more partnerships, or they want to scale up the team. So they need to raise 3 to 4 million, and that money is coming from the treasury, and they need to attract investors. But those investors can buy the asset on the liquid markets for the current price. So how can you get them in? Well, you do that by getting them and providing them with a discount. So then you are able to buy the price, or like a certain discount on the current market price. We invest into the protocol, we get a lower valuation. We are also having a cliff and a vesting, which means that on the invested, we have a certain period of time that we can't sell the position, and then it's getting unlocked on a weekly or monthly or daily basis. And then it's up to us to decide whether we want to hedge the position or whether we want to keep that position open. And I think this is a quite unique way of trading the markets, because we are not looking at the markets to say, okay, this project is going to do a 100x. That's more of a cup of tea for the venture capital. We are looking at the markets and are attracting opportunities that we see. So we trade the volatility, we are seeing base assets, and we think of mispricing everywhere, and we take OTC trades in fundamentally strong projects that we believe in at a discounted value that only institutions can get. And that combined creates a very strong strategy in the fund that I think that is going to do absolutely great over the years to come. And I'm personally super excited to see where this goes in the bull cycle. We've made a video about the fund today, and we have also been creating content on the other venture, and we have been showing you stuff on what we have been doing at the masterclass with OKX. This is the first step into showing more of what we do. It's not only me talking to you about the altcoin portfolio and saying number goes up or down. We are building some ecosystem here, and we would like to make more content of everything that we do. Did you find this interesting? Do you want to see more of what we're doing in the fund or in the venture capital? Let me know in the comments beneath. If you are interested into the fund, there's a link in the description where you can find more information. And I think the key lessons are that if you see a coin going up as much as Warble, and that is out of the ordinary in terms of volatility, then probably that's a wise moment to be saying, I'm going to take some profit and put that into other assets in which you're able to compound your returns. And I think compounding your returns is probably the most and biggest way of improving your portfolio and attracting a good return. Thanks for watching, and I'll see you again on the next update. Ciao.